Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Top Stock Picks. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks. And I think a lot of you have known for a very long time that I'm a fan of the Tesla, the TSLA. Now they're going to report earnings, and they're my pick for this week. So it is a Zacks rank #1 strong buy, and we see just what I love to see in my aggressive growth videos: an A for growth and an F for value. And that divergence in those Zacks style scores tells me that I'm on the right path if I'm looking for an aggressive growth sort of stock. And Tesla has been that aggressive growth name for a very long time. Let's go and take a look at what's going on with the stock and why this thing is a great Zacks rank #1 and some other great information about it here. Let's just start here down here with the reported earnings history, the surprises I like to see. Look at these big positive surprises. They're all big, all big, all big. Well, I mean, these two are really big, but the other ones are pretty big too. In the 30% is still a big beat, 38% is still a big beat, but 600, 500, they really skew the average there to 320% on average. But as we can see, the company has been reporting gains, gain, almost like gang. It's gain. And, there's been the haters on Tesla for such a long time, but they're starting to wilt away. Let's take a look at the estimates here. They're moving higher for this quarter from 80 cents to 87 cents. Next quarter, 84 to 90 cents. That's a higher move for the full year, and this year is basically over, looking at $2.32. But next year, look at this move higher. 349 to 378, and we think about it from 232 to 378. That is the move that a lot of people are going to be keying on. Of course, those are all good and wonderful numbers, but the bears are still going to scream, the valuation, Brian. The valuation, you're crazy. Who could buy a stock with a 244 times PE? Well, I mean, they also had 39% top line growth in the last quarter there. That's pretty awesome. And if we look just below that, we can see that there was actually 45% growth in a sequential basis. So growth, is that accelerating or decelerating? I would call it accelerating. Price to book awfully high, 47 times. Sure, I'll give you that. And awfully high here on price to sales at 28 times. But we can see margins are moving up as the profitability increases. And we make such a, the top line is so huge that just a tiny increment in margins is going to have a huge impact on earnings per share. So the report this Wednesday after the close, I believe that's correct, right? And I wanted to bring up this particular reason why I'm bringing it out here now. This is the Tesla homepage, and I just typed in Tesla.com and I got to this. And, a lot of people are just so concerned with the Model 3 and Model X and the Model S and the Cybertruck. All those things are great, but maybe we've forgotten about my computer's a little slow. Maybe we forgot about the wonderfulness of the Solar City acquisition, where you're getting solar panels on your house and also these power walls. I'll circle the power walls right there if I can. My machine's having a little bit of trouble, or maybe it's me. But the idea here is that this is starting to really roll out, and the demand for solar is huge. There is also a gigantic federal tax incentive to put solar power on your home. Now, I'm going to tell you right now, I live in Cape Coral, Florida, and we get a lot of lightning strikes in the summertime, and that makes me to be power insecure, which means there's power here, but there's all these blips of time where I'm going to lose power because of the lightning. So I have looked into this personally and found that it is extremely expensive, but the pricing of it is basically, are you going to be in your home for the next 20 years? And if you are, you have a break-even price. So that's kind of how they're pricing this out. So it's very interesting. To me, that makes it almost prohibitively expensive, but still, it's something that I think about a lot. Do I want to put a brand new roof on when I don't need a roof, just to make sure that I have power and always have power and be off the grid or not need to be on the grid. But it's a difficult decision. But it's pretty easy when it costs so much money, at least for me. So there you have it. That's why I have Tesla as my top stock pick of the week. Again, reporting earnings here on the 27th of January, and that is a Wednesday. And today is the 25th of January, as Terry Ruffalo used to always remind me. All right, I am going to kick this over to Tracy Reinick, as she has got another one, another top stock pick for the week. Take it over, Tracy.
So my number one pick this week is in the agriculture sector, and it's Deere & Company, ticker DE. Now, you might be wondering, why agriculture? Brian had the super hot Tesla stock. Everybody knows it's soaring. That's where you want to be. But Deere is also on the tech side. If you're going to talk about Tesla being a tech stock, so is Deere. And, with the economy reopening and agriculture starting down a new path here in 2021, could be the start of a super cycle. And you know what that means for the ag stocks? That's good news. So let's take a look at what's actually going on with these earnings estimates with Deere, because I think you might be surprised at what you're seeing. So let's take a look at these earnings consensus estimates here. So here is fiscal 2021. And as you can see, we're at 1316. Here's what they did just last year in fiscal 2020. 869. So huge 51% gain here in earnings expected this year. And then you can see into fiscal 2022, as the cycle continues, another 17%. And why does it have the Zacks #1 rank? Well, look at what the analysts are doing. One has raised in just the last week. As the story about farming becomes more bullish, and the soybean, corn, and wheat prices remain elevated, they're at 7-year highs. That's bringing in income into the farmers, and the farmers are desperate to go out there and buy some new equipment. It's been 3 or 4 years of a down market in agriculture, so everybody's been sitting on the sidelines. They're going to have some cash coming in now, so they're going to restock. They're going to get upgrades into the equipment. And a lot of the inventory for the equipment is actually low. So that's giving the ag companies some pricing power. And we also have those low interest rates. Don't forget about that when you think about how the farmers are spending their money out there. Now, remember, Deere also has a construction and forestry side of its business. Agriculture is still the big kahuna. In fiscal 2020, it was $22.8 billion in revenue, construction just $9.2. But if a big infrastructure plan passes where we're building roads and other types of construction equipment are going to be needed, Deere is big in that as well. So it could be a win-win in multiple areas for Deere here. Let's take a look and see what the consensus chart actually looks like. And here's where you can see the start of what this super cycle could be. And the agriculture super cycles usually last for several years. It's not just like 1 year and you're done. It's several years as the conditions rebound off those lows. And you can see it here in the earnings with, we had some of the gains going up here, and now we had the downdraft last year, but a recovery over the next 2 years with the analysts getting more bullish. And then you can see where the stock is also getting more bullish. You saw it in that last chart, but also here in the 5-year chart. I put it in a comparison with the S&P 500 just to kind of show what it's been doing. And while it's outperformed the S&P 500 over the 5 years, you can really see the big gains here in 2020 as the street is finally figuring out that the super cycle has likely begun. Shares were up 55% in 2020. So I know you're thinking like I am, like how much more gas in the tank is there? But valuations aren't that stretched here, especially for the beginning of the cycle that lasts a couple of years. We're getting those rising earnings estimates, so that'll bring the PE down as that continues. Right now it's trading about 23 times. So I know for some value investors, you're thinking, that's a little more than I want to pay. But if you get any kind of pullback here, that could be a buying opportunity, as again, the super cycle lasts more than just a year. Historically, it's gone multiple years. Deere also pays a dividend yielding just 1% right now, but does have a history of raising the dividend over the last couple of decades. So as you can see from this chart, the cycle in agriculture is exciting right now, and Deere is one of the top names that you should have on your list. So don't just discount agriculture because it's been in that bear market for the last couple of years. This is where you can find hidden gems, although Deere isn't so hidden anymore, but you can find a lot of opportunity in some of the sectors that maybe were down on their luck for the last couple of years, but now here in 2021, as the economy goes into recovery, and now as agriculture enters into this new cycle, you might be able to find some great names. So be sure to check out those Zacks #1 rank names on Zacks.com, because you can get a lot of good ideas about where those earnings estimates are on the rise by that list. And as always, next week we'll be back with some more top stock picks of the week.